Hey guys, let's quickly share what's going on in the market right now. So I got a lot of questions from everyone about what's happening in the markets, and this is specifically not for people who are trading or swing trading. If I was talking about swing trading, if I was talking about trading, getting in and stopping out of positions or taking profits, I would make a different video. This is for people who are long-term investors who are not willing to jump in and out of the markets, and this is a video for them. So again, let's just go on. A lot of the picks that I have are in disruptive companies, are in companies which are deflationary, which means that um, their products are actually taking money away from a lot of companies, right? And they're all part of the QQQ. So let's look at the NASDAQ. What's happening with the NASDAQ? One thing I taught, or I just use myself, is when the rate of change 20 drops below zero, I usually tighten my belt and I tighten my stops around those times. It's happened in the Nasdaq. This was my signal when it broke above. It broke above the 200-day, 50-day, and the 200-day actually crossed over. The rate of change 20 went positive over zero. So I jumped into the market around this time. This is when I bought Tesla. This is when a lot of people bought Tesla on my groups. I got into Neo. I got into a lot of the stocks that I had my eye on. Again, this is not for trading. This is for people that are long-term investors, right? I take my long-term investing signals from here sometimes. I see this. So this can also be a junction where the market can go sideways. It can jump maybe up or down in this area, which is also very positive, right? So if it needs to breathe, it has gone up. The Nasdaq's run up too much, too fast, too hard. It needs to just consolidate the gains, go sideways for a while. And while it does that, you don't need to take profits. You can sit on this. What I'm doing personally is I bought a few puts just to protect my long-term investments because I cannot sell in and out of those positions just because of work. I won't get the approvals, etc. Now, they're small amount and they'll protect me if we drop here. So there's nothing special to worry about right now, but because this is breaking the 50-day moving average for the second time in 1 week, broke here, got rejected, and broke here. So that's just a, little cautionary thing for me, and that's what I like to do. Again, it's so far, if you look at where NASDAQ is trading right now, this is the 200-day moving average, and NASDAQ it's about another 10% from its 10-15% from its 200-day moving average. Historically, and if you look at the bigger picture, I would draw something like this. So this could be, don't be scared, but in the worst case scenario, it could probably drop to here. If the NASDAQ were to drop to around this level, this would be a good buying opportunity for me. Now, it can actually go up to this level. So I'm looking anywhere around here, and the 200-day would probably catch up to the NASDAQ at that point. My buy points would be around here, and when the rate of change 20 goes again from negative to positive territory, that's when I would look to pull the trigger again and add to my stocks. So the puts that I'm buying basically just giving me a little bit of protection, and they'll give me a little bit of cash, which will be generated if this thing drops down to this level. Okay, that's it. Thank you.